Good morning. I'm Jamie Montgomery, and I'm pleased to welcome you to our program, Expanding the Envelope. Today we have three special guests and my longtime co-host, Rich Carlgaard. Rich is a global futurist, a former publisher of Forbes, and an editor at large, well known for his regular column in Forbes. He's a publisher, author, TV commentator, private investor, board member, mentor and advisor to a number of technology companies, and has real insights in the tech and financial world. Today, we're pleased to host three terrific resources. I'll give you a short introduction, and their bios will be put up in the chat function here. Vasant Prabhu is the vice chairman and CFO of Visa, a longtime financial exec, joined Visa in 2015 and been part of a remarkable run in Visa as they expand their global leadership in financial services. Ram Palaniappan, who I'm on the board of his company, I'm proud to say, is the founder and CEO of Earnin, which is really one of the most socially driven, enlightened, and interesting business models that you'll see coming out of Silicon Valley to revolutionize fintech. Ram is just a wonderful person. His heart and soul will come through today, as well as being a very successful entrepreneur and businessman. And Jimmy Chen is very similar to Ram in a double bottom line sort of person. He's built a software company that aims to fight poverty through technology. They're both reducing friction in the industry to help those less fortunate receive benefits, access to their wages, and access to capital to maintain their quality of life. And both Ram and Jimmy are backed by a number of top-tier investors, and Vasant is, providing strategic leadership to one of the world's great companies. So we have a tremendous resources today, and no one better to lead this sort of discussion than Rich. So with that, I turn it over to you, Rich, and thank each of you for joining us today.
Well, thank you very much, Jamie. It's such a thrill to be involved in the Montgomery Summit once more, and I hope we can meet again in person in the not too distant future. Yesterday, while promoting this session on LinkedIn, our mutual friend, Vish Mishra, and Vish, if you're watching, a hello from everyone, he wrote on LinkedIn, reminding us of some shocking facts about what's going on in America beneath the record stock market indexes and everything else. Some facts. Number one, prior to the pandemic, 80% of people in America lived paycheck to paycheck. Number two, 40 to 50% of Americans could not come up with $400 in an emergency. Number three, 12 to 13% of American households are feeding their families from food banks. And four, 25% of families are behind in paying their rent. Now, this frustration is really mounting. In fact, it's creating, I think, right now in 2021, a populist uprising in the culture. A lot of it directed toward, it's directed toward elite institutions of all kinds, but the financial community has not been able to escape this. We saw that in the recent Robinhood enabled trades. We saw something very disturbing that appeared in the Washington Post yesterday, was that if you take the rioters that were arrested from the January 6th riot, 60% had a history of financial problems, including bankruptcies. Doesn't excuse their involvement, but it is an expression, however ill-directed, of their frustrations. The good news, though, is that in good old innovative capitalistic America, behind the disturbing news lies potential, massive untapped market opportunity for fintech innovators to create products that will create more financial inclusion. And this session is really going to be about that. Before we dive in, I couldn't help but think of Mike Milken, whom I hope is watching this also, who, when he was a student at Berkeley in the 1960s, came up with a formula that proved to be very predictive and a really good instruction in how to create prosperity in a society. He said, prosperity equals the effect of financial technology acting to multiply the value of human capital, social capital, and real assets. So let us begin. Ram, tell us why you started Earnin and describe the challenge that Earnin is addressing, and how big a problem is it?
Sure, thank you. The way Earnin started is interesting. I never set out to start a company. What I noticed that some of my employees were running into payday loans and overdraft fees, and that didn't make any sense to me because I thought I was paying everybody well. When I spoke with one of them, the problem that she had was that she needed money the next day, couldn't wait till the following Friday. From my point of view, she already worked for half a week, and so we should pay her for the day she already worked. I couldn't make the payroll system do that, and so I did that by hand as like a workaround to the payroll system. And then I continued doing that, did it for people who I didn't know as well, and that's what's become Earnin. And I think it's really interesting if you, like when people have access to their pay when they need it, their life is much simpler. They're paying their bills on time, no more late fees on bills, no more overdraft fees, no more payday loans. And if you like think of how did we get to where we pay people every 2 weeks, every month, it's interesting. Till a few centuries ago, people were paid every day. It was only during the Industrial Revolution that we came to this concept of pay cycles. As an employee, you'd rather get paid 2 weeks before you work. Your company would rather pay you 2 weeks after you work. And today, no one questions that companies can pay us after we work. It just shows that shift in the balance of power. And I think like that's something that we're trying to like really fight against, which is like try to level the playing field for the individual, give them products over which they have control. And it's a huge area where if you look at like where all does our customer base who's lower middle income not have power? When they apply for credit cards, 80% of the time they're turned down. So the banks want to give them a credit card, but they'll give them overdraft fees. Banks write the terms and conditions, customers have no say in that. And so like really what we're trying to do is build products where the customer has a larger say in how the product works.
Well, the company's free use of employee money, if you want to look at it that way, is an inconvenience for the employees in a very low interest rate environment. But if inflation picks up, and as it might be, and we move toward higher rates, and God forbid, really high rates, then the formula gets even worse for employees. I mean, do you take interest rates into account when you think about the trajectory of how this may go?
Well, so my consumers never actually benefited from low interest rates. They were paying overdraft fees. The overdraft fees haven't come down. Their form of credit is to take out an overdraft. So the low interest rate has been good for companies, but my customer never really had access to that. Even they don't get to save much money, and so there's not much of a yield. But they're the ones paying the minimum balance fees. They're not getting any interest on their deposits.
Well, Jimmy, a similar set of questions. What inspired you to create the Fresh EBT app, and share with us the challenge Propel is addressing? How big of a problem is it, and how does Propel make a difference?
Well, thank you, Rich, and thanks to Jamie for having me here as well. So at Propel, we solve a small problem. It's the problem that the EBT card, which is the card that food stamp benefits are distributed on, isn't very user-friendly and modern. And we solve that small problem because we want to solve a larger problem. The larger problem is that the financial system in the United States is not built to help people who are low income to get out of poverty. It's a lot of the stuff that you were talking about in the introduction, Rich. These kind of symptoms of a financial system where economic mobility is really hard, where people get stuck in cycles and generations of poverty in a long time, that has all these kind of social knock-on effects. That is the big problem that Propel aims to solve in sort of the long-term time frame. But starting from the small problem first. So I started the company. I have a background in Silicon Valley. I was running a product team at Facebook when what I got really passionate about was taking the tools of Silicon Valley tech and applying them to the daily challenges of people that are very low income. It was sort of a belief that as smartphone adoption grew, that everyone in the United States was going to have access to a smartphone and going to be able to use apps, but that the population of people building apps and the types of problems that were being solved by Silicon Valley were getting even more narrow in terms of focusing on people who had lots of money. And so I started learning more about the food stamp program and specifically about what the daily experience of that program was. So food stamps is used by about 42 million Americans across the country each month. The benefit works as a deposit onto a government-run EBT card, which is a debit card that these benefits are distributed on. And in talking to people who use these cards to buy groceries, we found actually a small quirk that if you have an EBT card, you check your balance by calling the 1-800 number on the back of the card. And we actually later found out that that 1-800 number is probably the most commonly called phone number in the United States. And so we asked a naive question, like, why isn't there a mobile banking app for the EBT card in the same way that you would expect a mobile banking app for any other modern financial service? And that led us down a rabbit hole of government services, of financial services, of realizing that the public sector doesn't really talk to the financial services sector, and the financial services sector doesn't really talk to the government when it comes to these programs, and realizing there was a gap for a company like ours that could help to make the safety net more user-friendly. So the app that we built today is Fresh EBT, which replaces that 1-800 number with an easy to use and modern software experience that lets you see your balance and your transaction history to make the EBT card feel like a financial tool you would get from any other private sector player. And what we are building on top of that is, there are 4 million people who use Fresh EBT across the country each month, and that number continues to grow, unfortunately, as the economy continues to be challenging for a lot of low-income folks. We see an opportunity to use that as an on-ramp towards greater financial health, towards helping to address a lot of these more systemic issues around why is it that low-income folks pay a lot of money to cash checks? Why is it that people get stuck in these cycles of debt? Why is it that financial education is so difficult? That we actually think having a platform to reach people and a trusted relationship to this population is the first step towards this greater challenge of helping to build a financial system that is more flexible and that actually helps to get people to move out of poverty.
Yeah, I've read a couple of books recently on people who came from very poor backgrounds and were able to, in the United States, and were able to escape it. And both of them happened to be white males, so you couldn't attribute it to some of the other challenges that face so many people today, including immigrants. But what came out really loud and clear in both of these books was sort of what you might think of as the flywheel effect, that getting the flywheel moving, to get people out of poverty is sort of the biggest lift. And if you get momentum, confidence builds, better habits are embraced, people start hanging around, you start looking for opportunity rather than perhaps excuses for their situation. But when they're stuck in a credit trap or a bankruptcy or something like that, and the flywheel is not moving, it is moving, it's moving in reverse. I mean, it's never quite still. So I think, Jimmy and Ram, what you're both doing is so important, is to sort of get that flywheel moving. Vasant, visas everywhere you want to be has been a long-term company slogan. Gosh, I think I first saw it on Monday Night Football, probably in the 1990s. Share with us Visa's perspective on financial accessibility, and why does this represent an extraordinary time to expand the envelope?
Yeah, you said it. I mean, it is an extraordinary time, and we have a vital role to play in expanding the envelope. And it's on a whole bunch of fronts. Technology has made it possible to solve some of the traditional problems with expanding the envelope, the hurdles that existed. And we can help overcome those now better than we ever could. We can enable people we can allow people like Ram and Jimmy to scale with the infrastructure we can provide. If you look around the world, there's a ton of innovation going on. So for example, in Mexico, a supermarket chain called Oxxo came up with this idea and partnered with a bank where within minutes, they can open a bank account with some limited know your customer kinds of information. They're the fastest growing bank in Mexico, 10 million in a few months. Essentially, a lot of people entering the banking system for the first time. If you go to sub-Saharan Africa, mobile money is more common than bank accounts. And interestingly, what it does is once people go digital in their transactions, you can look at their mobile transactions and develop a credit profile. So there are actually fintechs in Africa that are looking at transactions on smartphones and extending loans. And I can go on and on. So fundamentally, what's happened is there were 4 major hurdles here. One was the last mile hurdle, which is access. The internet clearly has has opened that up. The second was cost. And that's where, as access opens up, it allows innovation to happen, and that can help bring efficiency into the system. There are also a couple of other hurdles, which is a lot of people who have not been, in the formal financial system, need some digital literacy to use these new tools, as well as financial literacy to understand what some of these new services they have available are. So we're trying to attack them on all fronts. The fact is that once you can get access, then we have a network that can do all these things for you. And it's become much faster and cheaper to get access. A smartphone gives you that, and the internet gives you that. And then our network, as you said, is everywhere you want to be. We can make available to you all the services that innovators like Ram and Jimmy are building. Having said that, I mean, internet access is still an issue. Not everybody has a smartphone. And I believe the last estimate we saw was, while there's a lot of progress that's been made, 1.7 billion people remain sort of out of reach of some of these capabilities. So there's still a lot to do here in addressing sort of the last mile problem. But look, I think we're very optimistic. We're looking, we in fact sponsor something called the Inclusive FinTech 50 competition, which is global. We do it with the IFC to find innovative companies around the world. We had more than 400 applications last year. Our job is to enable everybody and help them scale. And we think there's an extraordinary opportunity right now, to do what Ram and Jimmy are doing, which is to build commercially viable propositions that at the same time have an enormous amount of social good.
Well, it strikes me that in you are to Ram and Jimmy as AWS and Azure are to a lot of SaaS-based enterprise software companies. You are the infrastructure that allows the companies to scale. Ram, Earnin's stated mission is to, quote, create products that make money work better for everyone, which I think when you unpack that, I think there's more there than just getting your paycheck on time. I think a lot of people are trapped in poverty, don't even conceive of the idea that money can work for them beyond just trading it for the things that they need to survive. Tell us what you mean by that and how that translates into expanding the envelope.
Sure. So we're building products for the people who are left behind, who, as you said, are kind of on the flywheel that's going backwards. And we're building those products from the ground up. The first one that we built was access to your pay. And like the stat that you mentioned, 80% of people are living paycheck to paycheck. There's no reason that paychecks should be every 2 weeks. If you work at a job that pays, you should be able to get your pay right after that. And we've basically been able to make that happen for people. We help people avoid overdraft fees. We help people put money aside. And so increasingly people are building up savings with us. We're able to accelerate paychecks. And what we're able to do through this is help people avoid fees, save money, pay bills on time. And you see this come out through the stats. About 2/3 of our customers are telling us that they're saving on overdraft fees about $58 a month. And this is a lot of money for people who are in my customer base. It's almost half a day's work. About half the people who couldn't afford a $400 emergency prior to using Earnin now can. It also, I think, helps people deal with the stress. There's a lot of stress when you're short of money, living paycheck to paycheck. We hear so much about
that stress contributes to the lot of lack of confidence and bad habits and everything that keeps the flywheel going in the reverse direction.
Totally, yeah. I mean, during COVID, 84% of our members said that Earnin helped reduce their stress. We continuously hear stories of people who didn't have to put off a doctor's visit till Friday, or who could celebrate their child's birthday on their birthday and didn't have to wait for payday till that. And so we're also helping them live their life with the money they've already earned. There's if you've worked today, there's no reason for you not to get your pay today.
And well, I mean, a lot of politicians don't care for the gig economy, but the one thing you can say about Uber and the rest is that the people do get their pay on the day they work.
Yep.
Jimmy, among the Americans in 2021 who are, who specifically, beyond some of the things that we've talked about, but who specifically is not financially included? And why do you think that's so? And do you think, is that a deep infrastructure issue in the United States right now, or is it mainly an artifact of COVID and the shutdowns?
Well, I think what Ram is doing with Earnin is such a great example of how to make people more financially included. And these are people who already have bank accounts, right? And so I think, it's certainly not 100%, but I think we are at a point in 2021 where having people have access to a bank account or a prepaid card that they can load money on and swipe in a non-cash transaction, that sort of is no longer the frontier of what it means to be financially included in the United States. I think what it means to me to be financially included in the United States is to have financial products available at a low cost that actually meet your specific needs. And so what companies like Earnin and Propel do is we've noticed that there are segments of the population for which the existing, whether it's payroll services or financial services or government services, aren't actually meeting the needs of consumers in a way that actually makes them happy and makes them advance in their financial lives. And so I think that's what, to me, financial inclusion in the United States means now, is being included in a financial system that actually has your best interests at heart, where you are not using, for example, a financial product that's really meant for someone else and just sort of making it jam into your specific use case, but to have a company that is actually serving you as their core customer. And I think that's one of the powerful things about the emergence of the fintech industry as it has grown over the last 5 years, is the emergence of really vertical fintech, the ability to say, here is a specific customer that was maybe too small of a niche to serve for a big bank, but for a fintech startup is actually still $1 billion opportunity to serve this customer and serve them really well.
I want to ask all of you what barriers, including regulatory barriers, because financial services is, I think, trying to escape the gravity of the over-regulation, you could say. Maybe I misread that, but stepping back, the barriers for expanding the envelope, which might include regulatory barriers, I'd love to have each of you sort of comment on that, and I'll start out with Vasant.
Sure. So in terms of barriers, the barriers are definitely coming down. It doesn't mean they don't exist. I wouldn't underestimate some barriers that often don't get talked about, which is financial literacy. So we do spend a fair amount of effort ourselves and through our foundation, the Visa Foundation, to address this issue. One of the things you see in the data is that it's particularly acute among women. It's disproportionately greater number of women who are not in the envelope. And there's a lot of micro businesses that are often not in the envelope. A lot of it has to do with promoting financial literacy and helping them overcome some of the fears of what these products are all about. There's an element of digital literacy in that too. In terms of regulators and governments, it varies around the world. Some governments and regulators are very actively trying to bring down the barriers. And really encouraging financial institutions in their country and incenting them or requiring them to substantially enhance sort of the openness of the banking infrastructure. In Europe, you have open banking regulations that are moving in that direction. So in general, around the world, regulators are waking up to the idea that they have a role to play, and governments too are waking up to the idea that they have to actively promote this. But the good news is that, while governments may have wanted to do that and regulators may have wanted to do that, I think the best thing that's happened is the innovation, as you said, the fintech proliferation, which is extraordinary, right? Because now actual solutions are being developed, which governments and regulators couldn't do. And it's, entrepreneurs like Ram and Jimmy and many around the world are doing. That's probably going to finally break the barrier here in a big way.
Jimmy or Ram? Barriers.
So So I think one of the things that's difficult in fintech is you almost always have to like build through someone else, and you have to partner to do things. For example, you actually can't hold a customer's money. You have to be a bank to do that. So banks have a privileged right to hold money. If you want to move money, go into the ACH networks or the Visa networks. Again, you have to be a bank. A non-bank can't get into it. So there's this a barrier that you either have to be a bank or you have to partner with a bank. And so anytime you try to build something, there's always multiple players involved in it. And I think there's also regulation in that it's a heavily regulated space. And quite often rightfully so, particularly for my segment, because our customers have usually been taken advantage of by someone else. And so you have to work through that as well. But it's also interesting if you look globally, the way different governments have approached regulation is different. In some places, you see the governments actively saying that there is an area where there are no good solutions, and they're trying to encourage innovation. And in some places, you don't see that happen as much. And so regulation, I think, in some places has been pushing innovation, in some places is not.
Jimmy, I'll slightly alter the question for you because you're the third person to get it. But you've been quoted saying the expanding the envelope is not just a government responsibility, but is a challenge to the private sector as well. Can you elaborate that? And are there intersections where the two work together?
Yeah, I mean, I agree with what has already been said around the ways that regulation can be challenging for innovation, but I'll take a more optimistic approach to it, Rich. I think that the private sector and that fintech in particular has a huge and very valuable role to play in the delivery of government services in many cases. So perhaps just to use sort of us as an example, we serve people who are very low income in the United States, you know, these 42 million folks who get food stamp benefits. And one thing that is very different about the finances of low income Americans is that they can access these government administered financial services programs like the food stamp program, but also TANF and the earned income tax credit, the unemployment program, stimulus checks, and so on. These supplements to income are hugely important to the financial lives of low income families. And they're also a key part of what allows a company like Propel to operate in a profitable way, because that is a boost to someone's purchasing power that allows them to have a broader swath of services from the private industry. And so I think the opportunity here is to figure out a public-private partnership where the public sector can do the things that it's really great at around, around funding the programs, making the policy, and figuring out sort of the pipes in some cases, and that there are ways for the private sector to hook in a pro-consumer positive way to allow the delivery of these programs to happen really efficiently, right? There are many examples of this over the last year. In 2020, the pandemic has caused a lot of financial services and fintechs to step up. There are fintechs that are working on distributing stimulus checks. There are fintechs that are working on, I know, for example, in Visa's case, there's a lot that they've done partnering with Treasury. And so I think it is already starting to happen, but I think there are actually lots of other government programs where there is a real role for private sector innovation to come in and really modernize the last mile, like the delivery of those programs.
Yeah, I would just say parenthetically, it seems we've entered this era where government, which is long talked about private-public partnerships, seems to be really doing that, whether it's, SpaceX and the space program, Palantir and C3.ai and defense. Some of the fintech examples that you mentioned, I think that's all reason to be positive. Vasant, what does Visa hope to learn from its partnerships with fast growth, exciting companies like Earnin and Fresh EBT? I mean, and the second part of that is you're a global company, and we just checked 5 minutes, I think, prior to getting onto this session with a $460 billion market cap, so a big reach and rewarded by investors for its big reach. But what are the things that we can learn outside of the US? For example, Jamie mentioned installment pay apps like Afterpay, which an Australian company with a $45 billion market cap, and Klarna. I mean, what are sort of the best practices around the world that might be relevant to us today in the same way that, Asia and South Korea really taught us way ahead of the United States that mobile was going to be a huge thing.
Mm-hmm. About 5 or 6 years ago, we radically altered, the capabilities of our network. For the 60 years of our history prior to that, we only moved money one way in our network. It went from your bank account via debit card or your credit card to pay a merchant. That's what we did for most of our history. Going back 5 or 6 years, we did a few things to change what our network could do. Money used to flow one way. Now money flows both ways in our network. We can not only move money out of your account to a merchant, but we can move money into your account. And that's really, what people like Ram and Jimmy and others can use, where that's how earned wage access works, right? You ask for your money and we can get the money into your account through your debit credentials. The other thing that allowed us to do was every node in our network now can move money to any other node. In the old days, it will only move from, a consumer to a merchant. Now it can go from one node to another. It can go from merchant to merchant or consumer to consumer. That opened up a whole new range of person-to-person transactions, P2P, and that's mushroomed around the world. We then also have the ability now to send money from governments to consumers, which is US government has been using that, for example, to get the stimulus payments out. And then we can do all varieties of B2B on a global basis. So fundamentally, we've gone from enabling merchant payments to moving money of all types. What we're seeing around the world, some of the things to watch, wallets. Wallets are becoming effectively a quasi-bank account in many parts of the world. And we're partnering with all the major wallets. There's Line Pay and there's, Paytm in India, Gojek in Indonesia and Southeast Asia, Rappi in Latin America. Fundamentally, in a lot of countries, people take cash, go to a place to load their wallet, and then they're able to effectively use it like a bank account to make payments. We were early investors in Klarna. We are partners with most of the buy now, pay later. So you're going to see more innovative credit solutions. There's a company in the most downloaded app in Africa is Branch. I mentioned them earlier, and Branch will look at your mobile transactions and extend loans to you, to micro businesses or individuals in Africa. So you've got sort of innovative credit solutions coming up. We think there's a revolution in payroll. We are huge fans of what Ram is doing and what other companies are doing in the whole area of, we were very early with Uber to, do the on-demand, payroll concept with them. So what we're seeing essentially is a proliferation of use cases, which because of what we've done with our network, we can now enable. And that really is sort of the future. We're adding, thousands of these partnerships every year with these innovative companies. And essentially, we are a major partner in the democratization, if you want to call it, of finance.
That's terrific. Before I turn it over to Jamie, I want to ask Ram and Jimmy a question about investor expectations. As Jamie mentioned in the intro, you both have a blue chip roster of VCs backing you. Do they still hold you to their the same standards as they would for, I don't know, an enterprise software company? Or is there an element of good here that also causes them to invest? How did you do well and do good at the same time, I guess is what I'm asking. And how do you provide the kind of return that your blue chip investors are looking for? Start with you, Jimmy.
Yeah, we have no interest in being held to some kind of special social impact standard. Our investors invested in Propel because they believe in the mission, but they believe in the mission's ability to generate a large and profitable, profit-seeking enterprise, and that's exactly our motivation behind the company. I think the hard work here was really done before the founding of the company, because what I was really passionate about was finding a business opportunity that was truly a high growth business opportunity that was also going to have the impact on the world that I was really looking for. And so with Propel, the intention is that we've chosen an industry and have found a business model that will allow us to scale to have the type of social impact on economic mobility, on fighting poverty that we think we can achieve at scale, that also can generate lots of returns, because it turns out there's a lot of financial pain that we can help to address, and there's a lot of value that we can create for people. And so I think I suppose if you asked our investors, some of them would tell you they see it as kind of a double bottom line, but we don't really talk about it in those terms exactly. We really see ourselves more as a traditional VC-backed high growth consumer software play that also is just laser focused on a specific use case in a specific industry and a consumer for whom doing that effectively will have a really positive impact.
Ron.
Rich, I think in the long run, there's no difference between the customer's interests and the company's interests. When you do what's right for the customer, that makes the business more successful. And in our area, we see a lot of companies that make a lot of margin off our customers, but that margin, I think, is our opportunity. Financial services is such an odd industry where there's a huge concentration of market share amongst a few players, and their customers don't like them at all, right? Like all of the big banks have a negative NPS, but they have large market share. At some point, you'll see that change. And I think the way that change comes about is with new types of products. Anytime there's been a transformative disruption, it's not come from the same products. It's always come from a different category of products that move the customers away.
Well, with that, thank you, panelists. Jamie, why don't you take over and conduct the Q&A and wrap it up?
Well, thank you. I'm willing to take some questions from the audience. If you want to use the chat function, please do so. And we had, I was going to see if Mr. Milken might want to join us too. He was listening in, Rich, and he has some interesting perspectives on that. I'm just trying to track him down. Ram, quite a few people were asking about the scope of the challenge. How many, how do you see the entire payroll system changing to kind of real-time pay and real-time transfer of money, and kind of, in that you might call float is taken out of the system and then provides tremendous accessibility for people to live, a better life? Is that the ultimate vision?
We'll eventually get there. People will get paid every second. I mean, today we live in this world where we think that you get your pay only when your bank posts the deposit or when your employer runs payroll. But those are all processes that we built people built these processes. You don't need to have them. Money is completely digital. There's no reason it should work. It should move in a batch every 2 weeks. No one's taking a sack of money and walking around. You should be able to transfer this every second, and I think we'll get there.
Now, there was a question that was posed about the efficiency of government transfer. It looks like Jimmy's done a very good job with one portion of it, but the stimulus checks and then the cards, and then at the federal level, and then paraphrasing the question, it's a long question, and then at the EDD level in the state of California, we've had $20 billion of fraud, at least, maybe more. Jimmy, are there other parts of the transfer payment that can be automated and be made both more efficient, reduce fraud, and improve the quality of the service?
I think the answer is clearly yes, but I think the less clear question is who should do it. And should it be the state or federal government's internal processes that need to improve, or is there an opportunity for the private sector to partner in some productive way? I'll say, I think to me, one of the richest opportunities for public-private partnerships that ultimately end up making taxpayer dollars stretch farther is along the actual payment mechanism itself, right? The ability of the private sector, of fintech companies, to be able to step in and develop things that help people to get their payments faster, more efficiently, with fewer fees, is actually I think a clear win-win opportunity for the government to actually achieve a lot of its goals for these types of programs better too.
Like SNAP, TANF, Medicaid, et cetera, I guess.
Yeah, that's right.
So, Vasant, when you look out 5 years from now, I mean, in the strategy of Visa has always been to expand the nodes on a network. How does everybody in America have a Visa card above the age of 18, or is there? What's the ultimate vision here?
as you said, I mean, clearly, right, our objective is to expand the nodes of the network. That is how we create value for our business and our investors. But we also, the nodes are changing, right? So we don't talk about cards anymore. We talk about essentially credentials. It's whatever digital credential you need to access our network. So for example, you know, Ram and Jimmy are doing are nodes that never really existed in our network before. So there's a massive proliferation of nodes in our network. You know, take a business like remittances. This was an extraordinarily expensive proposition and dangerous too for people. You know, in the old days, and we never played in the remittances business. In the old days, you had to take cash, go to an agent, give them the money, they'd get it to your relative in Mexico. That relative would have to go to an agent, get cash, take a risk that they would be mugged on the way out, because that's where all the crime is, because people are coming out with money. What we're now offering all the remittance companies, and they're all our partners now, is you can sit at home and you can take the money from your bank account if you want, do it on your credit card if you want, any way you want, send it to the other end on something you've given them. You may have sent them a prepaid credential or put it directly in their bank account. They can now withdraw it at any ATM, less risk, and we're able to do it for these remittance companies at substantially lower cost. So we're going to see sort of a revolution in that whole space. So we're adding nodes at a very fast clip, and so it's an extraordinary time, and you know, it's a revolution in our business in a way, thanks to all the innovation.
Good. So a few observations. Some of our guests from Europe are kind of just mesmerized by how unequal income is in America and how we have this problem. And then a number from the Gulf region feel attracted to some of these models that are, you know, maybe, you know, helping individuals avoid usurious interest rates. So it's kind of a, you know, from a global point of view, there's some very interesting takes on what we're doing in America, and questions regarding that. Ram, is Earnin a uniquely U.S., you know, American proposition, in that the monetization is gratuities and we're known to be great, you know, quite gratuitous, or is this a platform that will scale, you know, outside the U.S. because it really provides, you know, real-time access to pay and financial services?
Yeah. So this is what we're doing can actually work anywhere.
Yeah.
The concept of a pay cycle is pretty global. Almost everywhere now, people are paid periodically. The way we've built it, it actually works globally as well, mostly. One of the things that we had to build was the ability to calculate somebody's earnings in real time. And that's not tied into payroll systems. It's not tied into anything that's geography specific. We use a lot of telemetry data from smartphones, which are all like global platforms. And so that works. The monetization, I think early on, like before we understand all the dynamics, you might wonder how well that works culturally, but I think today we understand it so well. And there's this, I think like all people like to help other people and like to stick together as a community. And I think like we know how that dynamic works, and that dynamic is pretty global. The one piece that we would, and like, so most of what we built is pretty self-contained. The one piece where we connect into things that might be more local is the payment rail. So we use ACH. In order to take what we're doing and move it to a different geography, we need to connect into the money movement mechanisms for that geography.
Okay, final question, and this is from a former undergrad colleague of Vasant's from Carnegie Mellon. Is that correct, Vasant? Is that where you went to school?
No, I wasn't at Carnegie Mellon.
Oh no, he teaches at Carnegie now.
Oh, okay.
I don't know where he went to undergrad, but anyway, I'll save his. I'll tell you his identity later. So, how do the panelists feel about crypto and other tech developments, and how that will impact accessibility across the broader population.
Was that for me, Jamie?
Well, if you want to touch it, I never,
Sure.
I never force anyone to answer a question about crypto.
Yeah, obviously, we're very intrigued by crypto, and certainly we're enabling a lot of it right now. So if you want to hold crypto in your account at Coinbase or elsewhere, almost like an asset class, we're enabling people to do that, to move money into Coinbase, convert it to crypto, move it back, etc. We're also enabling some new use cases where we're opening up our acceptance network, where you can use crypto at merchants, and then we'll handle the conversion to fiat currencies. So you can use crypto to buy and sell things. There are also situations in many parts of the world where smaller businesses in countries where they don't trust their currencies want to be paid in crypto, and where it's legal, we are making it possible for these businesses to get paid in crypto through our network. Fundamentally, we're moving to a point where if we can comply with all the laws and regulations, crypto is like another currency for us. We accept in the Visa network 160 currencies today. We would add crypto, and there's a role for us to play, because there are many blockchains out there, and we can be the network of networks, so we can connect them all and allow a sort of a global crypto business to evolve.
Okay, good. Any other comments on that subject? Okay, well, look, Rich, I think it's a wrap. Thank you very much for your time. It's 9:48. Everyone can get back to their busy days. Thank you for joining us today, our audience, particularly those overseas have tuned in, and then hope to see all of you at the Montgomery Summit on March 3rd and 4th here in Santa Monica. We'll be virtual this year, but we look forward to getting you back in 2022. Rich, thank you again, as always, for your moderating this session, and have a wonderful day, and let's keep doing what we can do to expand the envelope and make life better for all. So thank you very much.